What's up, guys? Hope everyone had a good day. It is Thursday, January 17th, and we'll do a bit of a daily recap here. So here's what's on the agenda. Take a look at today's action. Then I'm going to kind of break things down from a monthly chart, a weekly chart, down to a daily chart. I think there's a few things you want to take a look at in the volatility index. And then I'll kind of give you the game plan here heading into next week. But over here in the chat, let me know what you traded today. What'd you guys trade today in this beautiful market of ours? But in terms of today's action, we were talking about the box here this morning. So pretty big gap up on Tuesday's open, but the market doesn't really do too much with it. So basically we gap up on Tuesday, then we're caught in a pretty nasty range here. And there was a couple of cute attempts. We'll call them cute. Couple of attempts here to break it to the upside. Couple of attempts here to break it to the downside, but you got the real break here today, and you got a pretty good flush here all the way into the close. So we finally broke out of the box to the downside. And I think this is what's helpful about when you're coming into a session, or not just coming into a session, but as a general statement, when you're trying to gauge the next potential directional move, go looking for squeezes. Usually makes our job a little bit easier. But we finally broke. And that kind of led to some nasty selling here all the way into the close. But what I want to show y'all in terms of top to bottom here, just so we're on the same page as far as a game plan I'm trying to work into March and April, you do have a lot of things starting to shift here. So from one perspective, I know all of you know this, but you got the giant monthly squeeze in the S&P and the Qs and pretty much in everything. This monthly squeeze is your source of everything. It's like the source of life for the market for the last year and a half. And now those monthly squeezes are over. So that momentum party is basically done. You lose a momentum, you're breaking under the monthly AEMA. So kind of look at that as your gas tank is empty. All the good stuff is gone. From another perspective, and mind you, it's the same thing everywhere. Qs, Tesla. So you got that happening on the monthly charts. Big time loss of momentum. You break your monthly AEMA. So there's your break of structure. And then to take it a step further, all throughout 2020, all throughout 2021, you've got that crazy ass momentum. But every decent pullback, so like every time we pull back for 2 to 3 weeks, just takes you into perfect weekly support. So the entire ride here, you have perfect trend. You got perfect structure. 21 EMAs pointing to the upside. The whole push you had stacked EMAs, and the 21 is just basically pretty obvious support. So that's all good looking trend. So now we're losing monthly momentum, and obviously we've lost weekly trend and structure. So now we're basically flipping the script here. We're under the moving averages. 21 EMA starting to slope to the downside. There's no stacked EMAs. And then what I think is kind of interesting is the weekly chart here has the first negative histogram. So the first, call it bearish histogram for the squeeze since COVID, back in like February, March, and April. And so that's kind of interesting, right? I'm not saying we're going to get another COVID 2.0, or I guess like 3.0 at this point, but these are things I don't think you want to ignore. Same thing here at the S&P. That monthly squeeze gives you all your momentum, and every pullback here is just perfect buy the dip stuff. But now you lose momentum. Structure here starts to shift under the moving averages, and that histogram is going negative. So you got that happening there on the weekly charts. And then from my perspective here on the daily charts, they just look awful. So I got my sell signals on the S&P. I've got the sell signals on the Qs. We've got them here on the small caps. There's not many spots you don't have them. The Dow Jones, the semiconductor sector, tech sector, the industrial sector, and the healthcare and utilities. I mean, basically everything except energy has got some sell signals right now. So I think as we head into March, like these are just things to take into consideration. A lot of I mean, not really a lot. Kind of all of what worked in 2020 and 2021 was because of that combination. Crazy ass momentum. Right? Like, you're never going to get more momentum than when a monthly squeeze fires. So crazy momentum and perfect trend structure, perfect support. We don't have either of that right now. And then another thing I think you want to keep in mind here is we have, in terms of like where we're trading now off the highs, we've certainly seen a pretty good dip. Maybe a little bit more than a dip, but we've certainly seen some downside. So you got a name like Microsoft, previous highs up here at 350. This is down at 290. So from one perspective, it's like, wow, the market and a lot of these leading names have already come down quite a lot. I think what you want to focus on here are these weekly squeezes. Because granted, we've seen things fall apart pretty good, but from the weekly squeeze perspective, and keep in mind, when this fires either direction, you're looking for 5, 6, 8 weeks of momentum. So granted, we made a pretty good flush off the highs, but structure is just starting to shift here. Momentum is just starting to shift. And officially this week, you just finally fired the weekly squeeze. So in other words, I don't think we've seen anything just yet. We're really early here. This drop so far was just kind of shuffling the board. Now I think we can really get something going. So those are all things pretty much from like top to bottom I think you want to be mindful of here. And basically what this means to me is the opportunity set to the upside, it's getting pretty small. One more chart I'm going to show you here before we move on is the volatility index, because this one's pretty interesting too. Daily chart, you get that little bit of relief here for a few days. We saw the market put in a pretty decent little move there on Tuesday. But then VIX finds support at the daily 21 today, and you get a pretty good pop. So I'm looking for the market to kind of break the recent lows. I think the indexes will break their recent lows pretty much at the same time the VIX here is ripping back up near 40. So definitely keep an eye on that daily chart. But check this out. These are the kinds of things I geek out about. So you've had a few positive histograms here on the weekly chart. I mean, again, we don't got to go too deep here and do too much foreshadowing, but just keep an eye on the weekly chart of VIX. Big weekly squeeze. Now, granted, this is basically in a weekly squeeze all the time, but during the weekly squeeze, you're in a 3-day squeeze, a daily squeeze, 4-hour, 2-hour, 60-minute, 30-minute, 15-minute, and a freaking 5-minute. So you are squeezing everywhere. But more so what I'm seeing is as the weeks go by here, you're starting to get that shift in momentum on the histogram. Could be a whole bunch of nothing. But to me, it's kind of, again, interesting that you get a positive histogram on the weekly chart for the VIX, which basically means we're building up bullish momentum. And this is all happening at the same time that your indexes are starting to print their first negative histogram since the big vid. So all things here, my friends, to be mindful of right now. But with that being said, here's the best way to look at it. So we're looking at 2020, 2021. There's a monthly squeeze firing. There's good trend, like just basically picture perfect if you're bullish. And all we're trying to basically do here in a nutshell is buy dips into support and then play the next push in a direction of trend. It's basically the same thing here. You're just taking the structure, which in my opinion points towards this market's going to be trading a lot lower, kind of working the same ebbs and flows. So what I'm looking for here, and I got a few shorts on, I'll show you what I got. But mainly what I'm looking for here is into April, May. First, we're going to break the recent lows, but I do think we're going to continue to trend lower here. So as long as that's the case, pretty much any bounce, a meaningful bounce, any meaningful bounce, that's pretty much what I'm looking to short into. So a good example is something like the IWM. This puts in a pretty good bounce last week, and we're shorting it last Thursday. And I would like to short this all the way up to 210. So if you go back to the QQQ chart, you're playing those ebbs and flows. And ideally, you're taking your bigger positions. You're getting more aggressive after we pull back to that weekly 21. So where I would look to get the most aggressive on the QQQ to the downside, is a bounce back up towards 365, 370. Looking for that to puke. To be frank, though, and my name ain't Frank, but to be frank, it's not looking all that hot right now for some, super impressive bounce to the upside. So I think whenever it happens, and it will happen, as long as the structure is bearish, I'm trying to short it. But here's what I'm working with right now. Kind of just trades taken based on the structure, based on the current game plan I'm working here. So for the IWM, and we took this in the live trading portion of the class. We got a little bit of this in the mastery. Got a March 25th expiration in the money call spread. So shorted the 185s, bought the 190s. And these are the kinds of trades I think we want to focus on. You can do a debit spread. Doesn't have to be the in the money credit spread. I think what you want to focus on, if you look at the risk reward in this trade into March 25th, the max loss on the trade on 50 contracts, mind you, but the max loss is like 3,600. But a move into my target of 170 is going to net me about max profit, like 21,000 bucks. So really risking 3,000 to make 10, 15, 20. But more importantly, think in terms of like percentages. So say you have for easy math, say you're rocking with a $100,000 account. On this trade, you're risking 3,600. So you're risking 3.5-ish% to potentially make 20+%. And that's kind of the game plan I'm trying to work here, with the idea that, hey, if we're going to trend lower, and what does trend lower look like? Well, just take your QQQ weekly chart, flip this SOB upside down. This is what trend lower looks like. Big flush, right? Destroy anybody who's long. Big ass relief rally. A lot of times it's going to trick you into thinking the market's bullish again, but that's just reversion to the mean. Then we'll short it. That's generally speaking what a downtrend kind of looks like. So my game plan here is if we're going to get, 2 to 3 to maybe 4 shots at this thing, meaning you get a bounce like last week, you short, blow through that recent low, you take your profits, then you try to short the next bounce. If we're going to get maybe 2, 3, or 4 of those opportunities, and mind you guys, as I say this, the market could gap up 5% next week, and this all kind of goes down the drain. But it's how I'm currently seeing things. So if we're going to get 3 or 4 opportunities like this, these are the kinds of numbers I want to work every time. If I can risk 3% to make 10, 15, 20, and it works in my favor, and I can get 3 to 4 shots at it, all sounds good to me. Where this all kind of starts to change as far as structure might start to shift back in the favor of the bulls, or maybe just more so back to neutral, is back above the weekly 21 EMA. So I think on any short positions here, you're trying to short this as far as, you're trying to short it all the way up to the 21. But I also think it's a good place for a stop, is a weekly close above the 21. But that's what we got there on the little fellas right now. And I think the QQQ, I think that's going to break the recent low here. In terms of risk reward, though, it is a lot better if you get a strong bounce here. So that kind of is the difficulty. That's kind of the difficulty. But I got some short IWM. And if the IWM can bounce at all, I'd like to add to that short. Ideally, I'd like to risk 6,000, 7,000 to make 40,000, 50,000. But if we roll over from here, it's okay. I shall be just all right. But any bounce here, guys, and again, I think you want to short this all the way up into the weekly 21. So any bounce here, in my opinion, is shortable. And that's a game plan I'm going to work on the IWM. That's a game plan I'm going to work on the Qsters. And you could probably short the S&P. I don't think that goes back to a brand new all-time high. But I kind of like the Qs and the IWM. So I'm going to focus on picking on these guys. And I think you just want to structure a trade where you're going to go probably April expiration. And at this point, we're just looking for a nice dump under that recent low. So I kind of think any trade that you're given until April expiration that's going to benefit from the Qs under 330. Any short on the IWM that's going to benefit from the IWM under 185, 190. You can go slightly out the money debit spread. So you could go a little something like this maybe. April expiration, 200. Do you go 10 wide? Maybe. Let's see. The 200, 190 debit spread, pretty solid. But this is going for $3 right now. If the market were to bounce really well, you might be able to get this for $2. Notice how it starts to really shift the risk reward. So when you can get a bounce from an option standpoint, these debit spreads, or say you're going to sell the 190 call, buy the 195, it's pretty good risk reward at $350 a credit. But last week, or as the Qs are, the small caps are bouncing last week, probably could have gotten this for $425. Really starts to shift the risk reward. But that's how I think you want to structure something. Give it until April, and whether you're going to do an out the money debit spread or an in the money credit spread, short strikes near the recent low probably puts you in a good position, because if you can blow through the recent low, your debit spread's in perfect shape and your credit spread will be rocking and rolling. So that's going to be the majority of my focus, just shorten the indexes. In terms of some other spots we got here, so you got a short position in Comcast right now. So we got the short in Comcast. We shorted back up here. And then in the class today, we added a short on Nike. Gave it up pretty good into the close. Just looking for a push down to about 140-ish. If it breaks that, that'll be nice. Got a short on Nike. Got a short also today on Uber. Notice these all just have a similar structure to the market. Daily squeezes, under the moving averages, negatively stacked EMAs, sell signals. Uber kind of looks like Microsoft. Microsoft kind of looks like Home Depot. They all kind of fit the same bill here, guys. And running some scans today, just like daily squeeze scan, call it 70% of the names out there, they got sell signals. It's all crap structure. So the only bullish structure I think you got right now is over in energy oil. So you've got names like Devon, LNG, and Fang. EOG looks pretty good. So these are all solid. Right? These all got good structure. Let's take a look at the financials. Let's understand though, right? Semis, kind of trash. XLK, kind of trash. And this isn't my opinion. This is just, I got to trust the signals and the indicators here. So indicators tell me the industrial is kind of trash, as are the utilities. The transport's got new sell signals, real estate. So understand how much of a hot commodity something like an energy is right now. It's kind of slim pickings for good trend and structure. Let's check the financials, though. I don't love it. Wells Fargo looks really good. There's a few that look pretty good. My only issue here is you've just bet in this weekly squeeze since like midsummer. So it's kind of like, when are you going to get something trend wise? Whole lot of nasty chop here. But let's just check a few of them. The Wells Fargo dips to the 21. You got an early buy signal there. Let's check Schwab. Big Chuck. Yeah, see, this is what I mean. It's looks good for 5 days and then just starts to kind of crap the bed. See, Morgan Stanley. Yeah, I take it back. Forget the financials, in my opinion. It's tough for me to like a group when the group itself doesn't have a buy or a sell signal. So this is just like, it's neutral. It's choppy. And then you start looking at some of the names in the group. I mean, Goldman looks like a short. Morgan Stanley just blows through like everything today. Old Uncle Warren B, that holds up okay. Schwab kind of getting nasty here. Let's check Bank of America. Yeah, I can't love this group. You have much better trend, much cleaner charts over here in the energy and the oil names. So that's where I'd say, hey, if you're looking to get bullish in this market, here's your spot. So tonight, go look at, XLE, look at the top holdings, run a few scans there. I gave you a few names like Devon, Fang, EOG. That's kind of it, though, guys. There is XLP, which I don't love either because no stacked DMAs. It fights a pretty good fight here. So we'll give it kudos for that. Mainly because of Coca-Cola. Coca-Cola is trying to buck this trend. Let's see, Procter & Gamble's, they're all kind of trying here. Pepsi's clinging on for dear life. Well, I wouldn't short XLP, put it that way. I don't know if I'd buy it, but I wouldn't get short. I'd short just about everything else. So do keep an eye on energy, guys. Outside of that, it all looks a little bit iffy here. I was looking at DWAC earlier. Not too much happening there. And I think not Roblox. What's that other stock? Roku. I think Roku had earnings tonight. There was a pretty big expected move. It was like $30. Granted, they're down about 20 right now. I'd kind of look for a huge premium crush there tomorrow. But then again, Roku's in tough shape here, so could easily trade lower. But guys, if you got any questions here, if you got any charts you want to take a look at, let's do it. Kind of short and sweet and right to the point tonight. Show me a monthly chart, weekly chart, daily chart. They're all shifting. So it starts here with the big monthly. Right? Party's over. And you're breaking the structure. The weekly charts have already flipped. Moving average points lower. You're under the moving averages, no stacked DMAs. First negative histogram since COVID struck. Same thing here for the Qs. And then you got daily sell signals and you got VIX here. Looking a little sketchy. So I'm going into tomorrow and most likely the weekend short IWM, Comcast, Nike, Uber. And then he bounces, I'll look to short a bit more. But that is what I got for y'all. We'll get the futures, which we'll open up for a half hour here. We'll get those up, and I'll jump in the chat here and see if you got any questions. KR, good question. I mean, yeah, I won't say 100%, but yeah, there's a lot going on in the news right now. And here's, I think, the best way you want to look at it. When there's, call it like uncertainty in the air, and we could say that there's uncertainty surrounding the Fed and Ukraine and Russia, whatever the case may be. Where uncertainty typically isn't going to make a market budge. So kind of like imagine a tree. So if you got like a giant, like strong tree, like good solid foundation, strong roots, a little bit of wind isn't going to knock it over. The structure of the market right now, from a monthly chart, weekly chart to a daily chart, it's already a little bit flimsy. It's already kind of liable to snap here with a little bit of wind coming at it. Does that make sense? So yeah, I think a lot of this week's volatility certainly surrounds the news we're seeing. But I think more importantly than the specific news is the fact that structurally we have a market that I don't really think can handle too much here. Almost looking like a market looking for a reason to start to trade much lower. So yeah, I do think today had a lot to do with it. But structurally here, it's almost like the market is begging for a good headline, if that makes sense. Yeah, that's a great way to look at it. When you have bearish structure, shift in momentum, loss of support, any call it negative news, you can just kind of start to progress that structure a little bit faster. Hey, Soma, what's up? Where do I see the QQQ monthly chart going? Kind of as the initial stop here. And I think this kind of applies to everything right now. I think the initial stop here is going to be your monthly 21 EMA. Now, in terms of trend, I mean, that's actually just a normal pullback. So, it's almost like this was just unsustainable. That's not a huge, crushing pullback. We just ran so far, so high, so fast that from the top up there at what, 480 down to our monthly 21 at 400. There's your 16%, right? Yeah, so 16, 17% pullback. Just in terms of normal trend, it's a totally normal pullback, 21 EMA. So who knows what comes from there? But hopefully that makes sense. This market got so just so high that it's going to take 16, 17% to the downside just to kind of give us that first healthy reset in a year and a half. So that's not even bearish from this monthly chart's perspective. Big picture wise, stuff starts getting really interesting under that 21 EMA. This also conveniently lines up with, $400, which could certainly be a psychological level. But that to me is the initial target here for pretty much everything. So for the S&P, that's 400. For your QQQ, that's 330-ish. I mean, we're almost there. Another day like today kind of gets you knocking. But I see the same thing here, guys, on names like Tesla. Monthlies, just in terms of context here, this is nothing. This monthly squeeze takes Tesla from $100 to 1,200. Pull back to the 21 EMA here, around 700. That's peanuts in comparison to the size of the move from the bottom to that high back here. So I think Tesla is liable here to catch that fade down to 710. Microsoft 260-ish. One individual stock I would actually like to short is Apple. And to give credit where it's due, Apple has the best structure by far in all of big tech right now. But if the Qs are going to fire a weekly squeeze short and potentially grind lower for the next 5, 6, 7, 8 weeks, I don't think Apple's going to play hero here. I think Apple's going to trade much lower with the QQQ. So even though it looks pretty good, I kind of like the fact that we're not, we haven't rolled over already. So the puts are still relatively cheap. There's still good call premium left if you want to sell a spread. That to me is one way to try to catch the weakness in the overall market. So the Qs puke it up, break the low, head down to 320, and then keep trading lower. Apple probably comes back down to test 155 at least. But where's Apple's monthly 21? It's right around 140-ish. So those are, to me, the initial targets here, mainly for the indexes, but for a lot of things. Is a monthly 21 EMA for now. Mike says a pullback to the 21 on the monthly for the SPY, right back to the 618 extension. Yeah, Mike, a lot of things. Sometimes it's funny how it all kind of lines up. Fib extensions, big psychological numbers. Makes one a little suspicious, doesn't it, guys? Leaves a guy to wonder. Leaves a guy to wonder. All right, guys, let's make sure I'm getting caught up on everything here. But yeah, what did y'all trade today? Lucas shorted the IWM a few days ago. Good stuff. Someone hit some IWM puts in GLD. Gold's moving. Income Trader watched today. Certainly not a bad day to watch. KR had SPY puts. My man Barry, UVXY long, very nice. Ooh, Joseph, you got the short I was looking for. You shorted Facebook and Shop. Wow, Shop at 660. Holy crap. I was kind of hoping this thing could bounce a little bit. I was trying to short it to 700. Damn. So this goes from what? 1762 to 650. Crazy. I think the best way to look at the market right now is to some extent, everything's just coming back down to earth. Like, the market kind of wandered into a party, took a little something, caught itself like a just ridiculous high, and now I think it's all coming down. The ride up can be fun, but this has been a gets a little bit nasty. Nice job, Joseph. Nice job, Hop. Nice job on, was that Coke? Very nice. Very nice. Hey, there's Mimi. Good stuff here, guys. Good stuff. Hey, Travis, do I find my targets based on fib extensions? No, so Travis, let me just make sure I get another set of Keltner channels here. 90% of the time for me, the targets are just going to be based on the Keltner channel extensions. So make sure I can just get this how we need it. Give me 2 ATR, average type exponential. Make that purple. Bear with me here, guys. I don't want the average band. All right, there we go. So Travis, more often than not, depending on the time frame that I'm trading, I'm going to use the 2 ATR Keltner channel extension is my typical profit target. Hold on, this thing's bugging me. Got to make it match. I'm messing something up. It's been a long day. But the Keltner channels, Travis, I like to use those. Now, there's other times where, like the IWM, for example, we're already kind of near minus 2 ATR on the weekly chart. So sometimes I'm going to base things a bit more off of maybe, like in this example, there's no price support. So other than that load you put in, you've got no support here coming to save this thing. And there's nothing really here until like 170. Kind of previous resistance. So in this instance, I'm kind of looking for a push into 170, but more often than not, I'll look for a squeeze. And wherever the 2 ATR Keltner channel extension tends to be. So let's kind of flip this one here. like that 2. On a big push through that, it's typically where I'm looking to take profits. And on a short, typically on a big flush through that. So I'd say 9 times out of 10, that kind of serves as the guide. Just working based on average true range. Other times, like the IWM, we're looking for support. We can't find any. Yeah, look at a little baby gap there. Get your weekly 200. So different clusters like that. So Jorge, in terms of going with a debit spread versus a credit spread, and again, depending on how you structure them, they can really offer like similar risk reward, into the same targets. I think if anything, you go with that, you go with the credit spread when you think there might be a bit more potential that before you get the move you're looking for, things are going to be a bit more choppy. Meaning you might have to sit through some back and forth, and typically just being short options. So the credit spread is a little bit more forgiving. Think when things are really lining up. And to me, guys, I think you could do put debit spreads all day long here, and I'll probably look to do a few. When everything lines up and we're a bit more confident that the move we're looking for is going to unfold, even if we give the trade 50 days till expiration, if we're just a bit more confident it's going to unfold sooner rather than later, then I think you can lean into the debit spread. So there's a few things to keep in mind. The old credit spread can be a bit more forgiving. They got their advantages and their disadvantages. Yeah, WB. So for the Uber short here, kind of looks like the rest of the market. Not pretty. But what I liked about Uber today specifically was it reminded me a lot of our short in Comcast. And what I liked about the short in Comcast was obviously nasty structure, negatively stacked DMAs, whole just all nasty. However, right near that 21 EMA, this thing was stacked with squeezes everywhere. So here's the multi-squeeze label. So in we're short in Comcast, it has bearish structure, but you also had a squeeze on basically every time frame. The weekly, the 3-day, the daily, 4-hour, 2-hour, all the way down to a 5-minute. So to me, there's that timing component, where the daily chart already looks like this is going to eventually trade lower. But when you're building up energy on basically every time frame, that can kind of help you catch that push a little bit sooner. So with Uber here today, kind of looks just as shortable as everything out there, based on structure, etc. But check out the squeezes. Weekly, 3-day, daily, 4-hour, all the way down to the 5-minute. So what I like about there is that potential domino effect, where the 5-minute could fire short, and it could in the process trigger that 15-minute. That could then wake up the 30-minute. In every time frame here, once the squeeze fires, has the potential for 4 to 5 to 6 plus bars of momentum. So you can get 5, 6 bars of momentum on a 15-minute chart, but then if that wakes up the 30-minute squeeze, so on and so on. So that's what I like mainly about Uber today. Bearish weekly squeeze, under the moving averages, no stacked DMAs, negative histogram. Same thing on the 3-day squeeze. There's the 2-day. She squeezed in everywhere. Uber everywhere, as the kids say. But that's what I liked about that one. Overall, pretty bearish structure, but also that moment in time on pretty much every time frame. In my thinking, tends to be the more squeezes, the better. So that's what we were seeing there on old Uber. The old Uber goober. Mike, let's take a look at a few here. What you got? Mike's got PNC, DFS, and ALY. Let's take a look. PNC. Yeah, these are the financials, right? It's such a tough group. At least for me, it is. I mean, we caught a pretty nice push. God, I think it was back here last year. I forget when. You know, with raising interest rates, there's a lot of reason to think this is a group that could benefit. But it's so mixed, to me at least. So that looks like a buy. To me, that looks great. Berkshire, BRK/B. That looks pretty good. And there's Goldman doing Goldman stuff. There's Morgan Stanley. Chuck Schwab kind of says, look out below here today. It's not the spot I would short. To me, that wouldn't make too much sense. I think you got a lot of easier spots to short, a lot of spots that aren't set to benefit from everything going on right now. But I don't know if I'd get long just yet in this group. It's a tough one. Yeah, Kirk, everything's bearish except VIX. Except VIX. But one last note here, guys, on the financials. I think the easiest way to probably trade these is to just lean into the weekly charts. What I mean by that is you got some pretty good looking structure here. So I think if anything, that's kind of the setup you trade. Which means I think you give this a pretty big leash to move against you. You give it a lot of wiggle room, and I think you got to give it plenty of time till expiration. It can be a total nuisance, but once it fires, then you get your clean trend. The shorter time frames, that's a difficulty here, where we're just very much in consolidation, trying to catch trend. So I think you plant your seed and kind of let it just sit. Then see where that big old weekly squeeze takes you. Cobra, you got Moo. What's Moo? A milk company? Let's find out. What is Moo? I don't care what it is. It looks pretty good in the weekly chart. Huh. Is it agriculture? I kind of like your weekly squeeze here. Let's put these counting channels back to 1. Good call out here. Nice trend, nice weekly squeeze. Now, I'm not too sure, but would this benefit from corn? Apparently corn is popping off right now. Nice 2-day squeeze. This is actually kind of interesting. And a 3-day squeeze. You've got me intrigued, Cobra. I'm going to come back and look at Moo a little bit closer tonight. You've got good trend and momentum. And squeezes. Weekly 3-day. I like it. I like it a lot, actually. Kirk, what do I think of the Celtics moves before trade deadline? Here's all I'll say. I'm glad they didn't break up Jason Tatum and Jaylen Brown. Right? Get all that speculation they can't play together. You look at the last few weeks. They're looking great. They're looking great. Go fast. Can I buy you some Gucci flip-flops? Well, I hate to tell you guys, but my fiance bought me those. I tend to put minimal effort into the wardrobe. They're pretty good sandals, though. I do like me a good pair of sandals. Hey, Trung, take a look at Amazon. So I didn't do anything short here on Amazon. I'd like to. All just based on the big 3. Trend, structure, and Momo. So this was never anywhere near as clean or as powerful as the QQQ. But there's still some of the same shifts here. Spent a lot of time under the moving averages. They're pointing down. Nasty negative histogram. No stacked DMAs. So there's a weekly squeeze building up energy. There's no 3-day, no 2-day. I mean, if the Qs make a new low, I don't see any reason that Amazon doesn't do very much the same thing. Putting aside some kind of news. But yeah, the structure here is definitely short. Definitely shortable. And guys, kind of going back to what we were talking about earlier, there's the bounce. This is kind of your shortable bounce here. So I don't got anything there, but I would like it. Philippe do a post-mortem. Yeah, so with HCA, had that fair here today. I mean, pretty much was looking for this to do what our IWM, what our Comcast have done. Mainly our Comcast here. This is pretty textbook. But with HCA, we had the daily squeeze, no stacked DMAs. We had the sell signal under the 21. Was kind of looking for the same move here as Comcast has graciously given us. Nike could give it to us in Uber. And do y'all know if there's any news here? Not that it matters, but I'll give this thing kudos. This kind of pulls an about face pretty quick here. But this is where this takes back all kinds of structure. So just get rid of all these alerts because we don't need them. This is what I was looking for. You get your breakdown, get your bounce into the 21, trying to get that flush down to those lows. But yeah, this thing goes screaming here. So I do like our exit at 245-ish yesterday. Not how they should behave. They should behave like old Xfinity over here. So to HCA, we say rest in peace. And we'll see you next time around. What is that? Healthcare? Why the hell is that bouncing? Is that healthcare? That's for sure. That's for sure. Do a few more questions here, guys. Got kitchen. I was gonna say I got kitchen waiting in the dinner. I think I got dinner waiting in the kitchen. Lucas, to add on to Jorge's question on credit versus debit, when do I go in the money versus out the money? Good question. Really good question. I mean, so here's how I would typically kind of answer this. In the past, what I would say is, I would go in the money, in the money debit spread, out of the money credit spread, right? So I do a bit more of the less aggressive trade. If I thought there was a likelihood that something was going to kind of slowly grind higher or just kind of trade sideways. With this current market here, I've kind of ditched that mentality. I'm looking for the directional move. I'm looking for it to happen relatively soon. And I really want to get a good bang for my buck. So like with the IWM trade, we're doing the in the money spread, which is, if you think in terms of an options chain, if we want to short IWM here, well, the high probability options trade, come on. The high probability option strategy would be to do something like an out the money call spread. So you're going to sell the 215 calls and buy the 220s. This is really high probability, but there's the risk reward you get. You're going to risk 4,000 to make 960. So say you risk 4% of your account, you're going to make less than 1%, and we're looking for a move down to 170. If I'm looking for that big of a move, I certainly want to get a better bang for my buck than, I'm going to risk 4% to make less than 1%. My thinking instead is I'm going to take the lower probability options trade. So that's, 190, 185 debit spread. risking 1 to make 4. That's an in the money credit spread. I'm going to take the lower probability option strategy, but where I'm going to get my probability of catching that move is from the structure of the setup. So I think what I'm trying to say is, in the past, like with my credit spreads, I would lean way too much into the idea that, hey, if this thing just trades sideways, I can still make my max profit. And while you can make money doing that, here's kind of like as an example, we caught this big daily squeeze here in Google. And I sold my out the money credit spreads. And I made about $15,000 on the trade, on that nice little push right there. But I had to put up like $32,000 to make the 15. Where the point I'm at now more so is, have faith in the setup. I'd rather risk 10,000 to potentially make 20, 30. Now, even if the trade doesn't work in my favor as often, when it does, it really matters. So I think, hopefully that kind of answers, that question there. I think when you really have conviction and you really think you've got a setup that points towards, good probability of a move happening, we want to make sure we're getting our bang for our buck. You do a delta 80 deep in the money debit spread. It's safe, certainly safe, easy to manage your risk on, but then you catch your huge rally and it's kind of a small bump forward. So those are just things to consider. Are you trying to lean into the probability aspect of the option strategy? Or are you trying to lean into the probabilities of the setup at hand, taking you where you want to go? And then you're taking a potentially lower risk, higher reward structure to your spread. But that's just something that's really been going through my mind lately, especially as the market shifts here. How I would have done this spread on the IWM in the past. So let's just say we flush to 170, and I make the $20,000 of profit here. I have $3,000 of risk on the table, $3,600. What I would more so lean into in the past is I'm going to sell the out the money calls. So I'm going to sell calls up here at 220, but to make that $20,000, I'm going to have to put up 40 to 50,000 of risk. So yeah, selling calls up here, it's a higher probability trade. And I do think there's a time and a place where, I think with the Comcast trade, I think we sold one strike out the money. The risk reward made sense. But the more we just kind of look at things from this perspective, at least it kind of opens our eyes to, what are the variables we're always trying to work here? It's always risk versus reward. It's always, win rate, probabilities. Hopefully that makes sense, though, just in terms of the differences. Instead of having to risk, 40 to potentially try to make that 20, granted, I have to catch a move now. So I got to have faith in my setup, because if I just sell 220 calls, I don't need IWM to do anything other than trade under 220. So yeah, I need a pretty good move here now. But instead of risking 30, 40,000, I'm only risking 3,600. And ultimately can make more. So just things to consider there. But say the IWM bounces next week, right? And we bounce right back to say, 210. I might sell some 215s. I'm already kind of covered here with that low risk, really high reward trade, just in case we really break down. But hey, if we bounce here, I might make, I might try to take some of the easier money, sell some 215 calls, something along those lines. Great question, though. Great question. All right, guys, do one more question here. We'll do two more. We'll take a look at MO. Travis, how about them Rams? I won't lie. I was kind of pulling for Cincy, But you got some veterans there on the Rams, so always good to see the veterans take a. Yeah, there goes Altria. Finally went. Always good to see the veteran players get their ring. Altria here, that off she goes. It's kind of the last of a dying breed right now. Bullish daily squeeze. Pretty nice break here. Pretty nice break here. I would look for that to take you back towards your high. With today's break, there's really nothing stopping you as far as resistance until you're back at that high. So that looks really good. I probably prefer to try to buy on a dip. And as I say that, I realize I have the opportunity to do so for the last 2.5 weeks here. Yeah, Integral. We're gonna get that video out to you guys soon. My apologies for the hold up on that. That's my bad. But yeah, we're gonna get that and a few other things out to you guys soon. All right, Randy. Do I ever trade credit spreads or short volatility when momentum is slowing on the TTM indicator? So, Randy, do you mean long or short, or both? I suppose. The answer would generally be yes, because maybe not on a daily chart, but here's a good example. So the reason I really love credit spreads in a bullish market, especially in a bullish market, this is kind of a visual example. When the Qs are pulling back, so say we're pulling back the key support here. Once we're at support, one of the first things I'm going to look for, on a 15-minute chart, a 30-minute chart, etc., is that shift in momentum. Really can look for that bearish momentum to start to slow. Because what I'm trying to capture here is, all right, we flushed for a few weeks. With that flush, what happens? You get the spike in implied volatility. But under the surface, as everything starts to cool off here, momentum all kind of starts to shift. That's when I really want to sell that put credit spread. Because if I can catch the IV collapse, makes for a really nice trade. So in that kind of instance, that's where, hey, pulling back the key support, let me really focus here on those lower time frames and try to catch that histogram starting to shift. Whether that's bullish momentum starting to die out or bearish momentum starting to die out. Good stuff. Travis, the email is, I'll put it in the chat here, simplertrading.com. There you go, my friend. But all right, guys, good stuff. We shall do this again next Thursday. But hopefully it's given you a few things to at least take into consideration here as we navigate these choppy, volatile waters here. For tomorrow's session, in terms of what I'm paying attention to, honestly, whether or not we can hold today's low. I wish I had some, deep level technical analysis for you, but that's kind of all I got. Actually, there you go. We're kind of at these recent lows. So yeah, you got a 3-day weekend coming up. You got some countries out there with talks of war. Right? So there's a lot of chirping going back and forth. 3-day weekend. You break support here, you break the low. You probably get some folks a little bit spastic into the long weekend. But anything is possible, guys. Anything is possible. But hey, I'm gonna go have dinner now. Go hang out with the fiance and the dog. So I hope you guys have a good night. Be safe, chart responsibly, and I will talk to y'all soon.